Hi guys, welcome to Stock 22 of Diwali to Diwali series. This company is into the industry of airflows. The name of the company is Aeroflex Industries. My key investment thesis for Aeroflex Industries is increasing demand of HVAC systems, large scale industrialization and modernization in agriculture, and demand from the new age industries like aerospace, satellite, solar, robotics, semiconductors. So that creates the thesis for Aeroflex Industries. Now, coming to the business of Aeroflex, company is one of the leading manufacturer of metallic flexible flow solutions made with stainless steel, and that is used for controlling the flow of all form of solid, liquid, and gases. It is 3-decade-old company, and it's part of SAT Industries Limited. Product profile wise, it is having the braided, unbraided, both kind of hoses, as well as solar, gas, vacuum hoses. So there are different kind of other assemblies which it is manufacturing. It exports to 89 countries across the globe. So it has a diversified go-to-market model. Its products are scalable and customized. That is one of the good strength of the company. The current serving major industries are steel, metal, oil and gas, chemicals, seafood, paper pulp, and pharmaceutical. The strength of the company. See, it's a 3-decade-old company, so extensive promoter experience is one of the major strength. Employee strength is almost 500 plus. Company has 2,500 plus SKUs, strategically located near the port, 80 plus machine lines, 72 plus different products coming out of R&D, qualified R&D team, and then accredited lab, ISO certificates, adherence to global standards. So not easy for a new company to come and grab this market specifically. So there is a advantage to this company by being in the market for so long. If we come to the revenue breakup, you can see that the breakup is divided into stainless steel flexible hoses versus another different assemblies and fittings. So flexible hoses comprises the major part of fitted products. Company is majorly export oriented, and geographically it is supplying mostly to America. And the different end user industries, steel, oil, and natural gas are the major ones. Coming to the fundamental ratios, company has a decent ROCE, ROE, debt is nil, almost free cash flow is good over 5 years, pledging is not there. Company is having a stable operating profit margin of almost 20%. Over the last 4 years, your net profit has went 8x time. Promoter has sufficient skin in the game, as well as recently Big Shark Ashish Kacholia, along with the Bengal Finance, is holding 3.6% stake in the company. That's a big positive for us. Now, coming to the triggers, the macro trend wise, the industry is growing by a rate of 8.2%. And traditionally, the demand has been largely driven by the industrial sector. And as we see, a lot of capex is going ongoing in India as well across the world as well. So I feel the demand will keep coming for this kind of company. So company has anticipated that demand and is been working on the capacity expansion in different products. If we see the stainless steel flexible hoses, so company is expanding in 3 phases. First phase is completed in March 24. The next phase is going to be completed in August, and the third phase is going to be completed in December. If the composite hose, they are adding 3 more lines. Assembly fittings, they are adding 5 new stations. And even for the metal belows, a new segment, they are doing the expansion. They have taken the land for it, and they are doing the expansion. So this metal belows are the value-added products for this company, and that will help to improve the margins further. So that will also give them the little bit higher ticket size in terms of revenue or expanding the clientele, and may help them to do the cross-selling. Company has also gone for an inorganic acquisition. The company's name is Head Air Engineering Private Limited. So what they are doing is they are into the fluid control assemblies. So company is trying to move towards assemblies and fittings also, where they might get little bit higher margins. and that will help them to move to the new industries of railways, shipbuilding, and heavy industries. So they have a new client success there with the Mazagon, Dockyard, SAIL, BHEL, DSW. So all the big players will become their clients in that segment specifically. So I will believe this inorganic acquisition will help them to improve the margins as well as um, enter into the new territory, new customers. Now they have also planning to expand their presence into the new segments like electric mobility, fire sprinkler, solar, robotics, semiconductor, aerospace, and satellite. I would be really interested in the coming years in all these segments. If we look at the management commentary, they are also telling us about the increasing margins possibility and increasing order from assemblies. That's what is the expansion is being done for the company. So coming to technicals, this talk I have shared on 8th September with my studies. This video is a bit late. So at that point of time, the stock was breaking out and then the volumes are decent in the recent times. It has gone up to 210 in the last week and then trying to retest around 180 itself. So looks promising for the next in the coming quarters. Coming to the risk, the company is having a high PE in the short term, definitely until the margin expands and it is translating to the bottom line. I feel the PE is a bit high here. Company has a large working capital requirement, so cash conversion cycle is a bit high. Company has exposure to the raw material, which is volatile. Now, if the acquisition don't play as expected, then there could be a chance of the price will come down a bit and we could face losses there. Other thing is if the demand doesn't originate as anticipated from the old industries or the new age industries, then again we are facing at the reduced bottom line. So that will also translate to risk for us or losses for us possibly. So this is a quick bite on Aeroflex. Please go through in detail at your site as well and let me know if you like it or don't like it. We'll be back with Stock 24 sooner. So I will till that time, goodbye.